Welcome to the Quality Investor. Today will be a quick video as the United States, at least, slows down this week to celebrate Thanksgiving. So for my US viewers, happy Thanksgiving. This will be my son's first Thanksgiving and he's excited to try turkey. He just doesn't know it quite yet. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. We are going over 3 super investors in their latest 13F filings, assessing their activity this past quarter. I want to jump right into it, but we'll start with a high-level look at all the super investor activity for the quarter, and then we'll review the portfolios of Warren Buffett, Chris Hohn, and Dev Kantesaria. This is the total ownership of the S&P 500 for the super investors that are tracked by Datarama.com. It is, of course, led by the usual suspects here. 5 of the Magnificent 7, Microsoft, Google, Meta, and Amazon lead the way here. Microsoft with 35 super investors owning it, Google with 32, Meta at 29, and Amazon at 25. If you're looking to do some holiday shopping this year, I feel like the top 104 or so are the place to look. That would be from Microsoft here all the way down to Verizon. Every one of these stocks here in the top 104 have at least 5 super investors that own it. To me, that indicates this is where they're most bullish. So if we look in this list here, we might find some pretty good deals. I know some of the more popular ones right now are United Health, which is also quite popular on Twitter. I also believe Intuit has some pretty good value at the moment, and also MSCI. In this past quarter, for all the 13F filings, we see that these stocks here were the most bought in the entire quarter. Fiserv, United Health, Amazon, Meta, Nvidia, and Visa. 8 different super investors bought or added Visa to their portfolio. That does surprise me a little bit. I do think MasterCard is actually a little bit of a better value right now. Adobe follows up here a little later in the list with 4 buys or adds in the quarter. I think Adobe is severely undervalued right now. They keep putting out solid earnings report after solid earnings report, yet they are in the doghouse of the market right now. Hopefully that changes because I do have a large stake in Adobe. I think Adobe is a case of a broken stock, but not a broken business. And the biggest sells in the quarter, we have Microsoft, Google, Meta, and Amazon. A lot of these have been trading very high over the last few months, so this activity could indicate possible trimming of positions, maybe taking some cash or beefing up cash portfolios, possibly looking to put their money in other stocks that might have better potential. But we are going to dive into 3 super investors right now, look at their portfolios, and see if we can speculate on to some of their rationale for their moves. We start with arguably the greatest investor of all time, Warren Buffett. Warren Buffett is retiring at the end of this year. So an incredible and legendary era is coming to a close. We're looking here at his portfolio. We see right away he made a reduction to his Apple stock yet again. This is the 2nd quarter in a row now. He began trimming Apple early in 2024, but then he took a couple quarters off and is back to selling. Warren Buffett is not really making a secret as to why he's selling Apple. At one point, it did make up nearly 50% of his portfolio, so he has trimmed that down to now 22.7%. And one of his stated reasons for selling is actually tax optimization. He wants to lock in these profits at the current rates before there are potential rate changes. And he might also believe that it's at elevated valuations right now. It is trading pretty high at nearly 35x forward earnings. One caveat on this portfolio, though, is it's very likely that some of Warren Buffett's lieutenants are actually the ones making these buys and sells now, not necessarily Warren Buffett himself. He might have a large voice into what is bought and sold, but ultimately his lieutenants are now managing the portfolio actively. But really the most notable move that Warren Buffett made in this past quarter was adding Alphabet or Google. This is a rare tech buy for the investing giant. Apple, of course, has seen re-acceleration in their search revenue, their core business. They have massive free cash flow. As you know, I'm a massive Google bull, and it is also the largest position in my own portfolio. And it's ever increasing thanks to Google's massive run up in the last couple of months. I've talked ad nauseum about their very strong economic moat in their advertising, their YouTube, their GCP, which is gaining operating leverage every single quarter. So for Warren Buffett to add this to his portfolio, it signals high confidence in the AI revolution, I think, as well as a nod to the dominance that Google has built over the last couple of years. One other move I quickly want to touch on is he added some more Domino's Pizza. I actually did a review of Domino's earnings a few weeks ago. Please check out that video. I talked about how Domino's franchise strategy makes it a very good cash cow for the business and how they've been growing despite all the economic uncertainty. Apparently, Warren Buffett feels the same about Domino's as I do. Next, we are looking at Chris Hohn of TCI Fund Management. He has a $52.7 billion portfolio, and he only holds 9 stocks. One reason I like this portfolio so much is because of that highly concentrated nature of it. To have a portfolio this concentrated means you have to have incredibly high conviction in the businesses that you do own. And for me personally, this type of concentration is what I want to aspire to down the road. He made 2 very notable moves in this quarter. The first is he added to his Visa position here, upping it by 47%, and he also reduced his Google position by 41%. Now, the Google move is interesting here. Chris Hohn has been on record before stating that Google is the riskiest position in his portfolio. I saw that on a video he did a couple quarters ago regarding his 13F filing. If I can find it, I'll link it. So it's possible he's paring this down either from a profit-taking perspective or possibly cycling into safer investments like Visa. The AI revolution has sparked a lot of enthusiasm and hype in the market recently. So stocks that do have heavy AI exposure have been benefiting from a lot of market run-ups, Google included. So he could see Google as pretty richly valued and is mitigating potential risks. And if you look at some of the stocks here that he could have added to, so we have Visa, Microsoft, Moody's, and S&P Global. Now, Microsoft, in my view, is trading right about its fair value, maybe a little high at this moment. And also Moody's and S&P Global. Both of them are businesses I personally would like to add, but I've never found a good price for them to add into. They're very high economic moat businesses, a duopoly for their respective credit rating markets. But Visa has been trading pretty flat or down between the 320 to 340 range over the last few months. And I also think it's a little undervalued. So it's probably a pretty good move for him to cycle into Visa and out of Google, given the risk that he wants to have for his portfolio and has stated remarks in the past about Google being his most risky investment. And finally, we're looking at Dev Kantesaaria's portfolio of Valley Forge Capital Management. This is a $4.2 billion portfolio, and he also holds just 9 businesses. Now, full disclosure, this is my favorite portfolio of all the super investors. It is highly concentrated, and all the logos that it does contain are stocks that I either hold myself or aspire to hold. The stocks that he owns that are currently in my portfolio are FICO, MasterCard, Visa, Intuit, and MSCI. And stocks that I really want to add, but at the right price, are S&P Global, Moody's, and ASML. Although I had an opportunity to own ASML when it dipped below 600, I passed on that opportunity. I have to live with that every day now. All kidding aside, this is a great portfolio. His only move here was a slight reduction in his Intuit holdings. Another thing about this portfolio that really impresses me is the patience that it must take not to do anything in a given quarter, especially when there actually might be some good value out there. I believe right now that MasterCard, Visa, Intuit, and MSCI are all good values, but what does Dev Kantesaria do? Nothing. And that shows the remarkable patience you must have to be a quality investor. That's another reason why I like this portfolio so much and I admire Dev Kantesaaria's style, because patience is a virtue when it comes to investing. You have to have the conviction to hold when things don't go well for some of your stocks. You have to have that conviction to buy when you see that opportunity in a stock that you've been eyeing for a while, that the market might have a little bit out of favor at the moment. And then you have to have the conviction to do nothing if you don't believe there's anything that aligns with your investing values out there. And that's what Dev Kantesaaria does. Dev Kantesaaria did not release any reasons as to why he slightly reduced his Intuit position. It's possible he's just taking a minor gain, increasing his cash pile for buys later on. We shall see what he does in the future quarters. So that was a quick look at the super investors and some of the moves that they made in Q3 of 2025. This is just a quick video to take us in to the Thanksgiving weekend. And on that note, I hope all of you out there have a very happy Thanksgiving, enjoy the time with your families, and I get back to a regular publishing schedule after the holidays.
Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.